Namaskar. Welcome to the Choice Insurance Broking India Private Limited podcast series. This is the second podcast in the series of podcasts that we have proposed to bring out for our audience. I am Dinesh Kumar, Head of Claims, and with me today is industry expert in the general insurance sector, Mr. Radha Krishnan, with having more than 35 years of experience in the insurance industry. He has traversed through n number of channels in insurance, you can say, starting from property to liability to cyber insurance, you name anything in insurance. I can say that he is more like a Sachin Tendulkar to insurance, and this is how I can introduce him. And as audience, I would definitely say that you would have seen him on many forums as a speaker, and his write-ups on the LinkedIn, his posts, his expert comments. He is well known, and he is here today at our invitation. Thank you so much, Mr. Hari,
Pleasure was
being
mine.
with us. Today, we are going to talk about fixing of the sum insured in case of property insurance. There it's in fact, fixing of sum insured in a property insurance has remained a thorny issue because on n number of occasions we have seen, and since I had been doing claims for a number of years, we have seen that a lot of grievances come because of deduction due to underinsurance.
Yeah.
In the property insurance policies specifically. I would like to ask you the question: what are the problems of valuation of the property under insurance, and how we can overcome that?
The problem of valuation or the fixing of sum insured is that there is no standard universally accepted methodology for valuation. And the policy also doesn't say that you have to value the assets in a particular manner. It only says that the value has to be adequate and it should represent the market value or the new reinstatement value, depending on the basis on which the sum insured has to be declared. But how that has to be valued or how that has to be arrived at, what is the methodology, the policy doesn't say. So the valuation to that extent is not an exact science. So there are various methods of valuation. You can do it by way of indexation. You can do it by way of inviting quotations for new equipment. So there are various ways in which valuation can be done. So whatever you do, that value has to be adequate at the time of claim. And the test of whether a valuation is adequate or sum insured is adequate is only at the time of claim. Otherwise, nobody knows whether the valuation is correct or not.
Right.
So these are some of the problems because of the subjectivities involved in the valuation process.
You said about market value and reinstatement value.
Yeah.
The valuation is different for market value and reinstatement value?
Yes. You start with the reinstatement value. So that is the value of a new equipment, similar capacity and performance and features. And then market value is the value of a similar item with the same usage and same condition as the damaged item. So generally what market value is taken is the depreciated value. So you take the new replacement value, apply a suitable percentage of depreciation to account for the usage, and then you arrive at the market value. So this will be defined in the policy itself, how these will be arrived at. So you can use that to do your calculations.
In fact, while working as a claims head in one of the PSU insurance companies, I had come across a claim from a very large PSU that was a fire to their building. and the building was underinsured by 90%.
Yeah.
When I asked the concerned person that why you have underinsured the building by this much, and you are such a big company, and you know about insurance.
Yeah.
They said, sir, we do insurance only to satisfy our auditors. What do you say about that?
So many times it is insurance becomes a compliance matter. So some companies have a policy that there should be insurance, but then a little detailing or guidelines on what kind of insurance should be there. So just then insurance becomes namesake. So people might take it on the book value, but then the book value might be will not represent the present market value or the reinstatement value. So at the time of claim, it will be heavily underinsured because the building could be old. So if the older the building gets, the book value goes down that much. So the difference between the NRV and the book value becomes higher as the building becomes more and more older. So this is why these kind of things happen, that at the time of claim it is insured only for 10% of its value.
I have one more question. Why do many companies they struggle to arrive at a particular sum assured which is adequate?
Yeah.
In most of the cases, I find that most of the companies, even if they have the expertise, they struggle to fix a sum assured.
Yeah.
What could be the reason?
See, they don't have a proper methodology for it. First of all, what you should do is you should have a proper valuation approach. So you should document it. See, how are you valuing your assets? So you have the gross block from your balance sheet. You take it, you index it, you arrive at the current replacement value, and you insure for it. So the whole process should be documented. What kind of assets do you have, and then how have you arrived at the new replacement value? And then there are capital additions or deletions happening through the course of the year. So you update your valuation for the next year when you renew the policy. So there has to be a proper document for this. Most of the time, that document is not there. So nobody knows how the values have been arrived at. So, and in many corporates, what happens is people keep changing. So a person was in charge of insurance at one point of time, he would have done something, but when his successor has come, the ये कैसे किया था ये बताते नहीं है, तो the second person doesn't know what has been done before. So all these things can be avoided if you have a proper process of asset valuation. And the asset valuation requirement is not the same for every type of asset. हर एक asset का अलग अलग approach होना चाहिए. So, for example, if you have an imported plant, all your machineries are imported.
Yes.
Much of it is very low component of it is indigenous. So you need to reevaluate more often than a indigenous plant, because imported means there is exchange rate fluctuation also, and it will the values become inadequate faster than a totally indigenous plant. So it is possible. I'm not saying that this has to be absolutely correct, but this is one of the scenarios. So when you have a totally imported plant, and you have to look at the exchange rate fluctuations also and index for it, and so you need to conduct frequent valuations, more frequent than somebody else. So these kind of processes should be done, and it should be documented. Then you can avoid underinsurance to a large extent. And you can also do one more thing. You can have a discussion with your insurer. You can invite the insurer to be a part of that valuation exercise and say that this is what I have done. So what is your, are you concurring with this? Because nowadays there is no tariff or anything like that. So you can get into an agreement with the insurers on that as
So here, my question is, say a corporate, they've done the valuation of their assets through a professional valuer, and that report is there, and they've submitted to the insurance company. So they want the insurance company to make it a part of the insurance contract.
Yeah.
And they do so.
See, it is up to the insurance company now. You then it becomes an agreed value policy.
Yeah.
So earlier during the tariff time, agreed value policies were not allowed. Now it is a decision of the insurance company. So the insurance company, if it decides, okay, I am happy with that valuation, so I am waiving off underinsurance clause from the policy. So you don't have to say that I am agreeing to the value. You can delete the underinsurance clause. And the underinsurance clause also has a cushion, like 15% या 10% तो माफ कर ही देते हैं, so that the valuation, if there is some shortfall in some insured, that gets taken care of.
So what are the scenarios where underinsurance is waived by an insurance company?
So waived in the sense see, agreed value policies में तो waiver होता ही है, because there cannot be a value, assigned value for it. It is a intrinsic value. So for example, precious stones or those kind of paintings and artworks. So that is on an agreed value basis. So the underinsurance is completely waived off. You agree on a certain valuation. So that is one instance. The other is when the insurer is happy with the valuation and he feels that the values are adequate. Some international insurers, they do that. They have their own property appraisement provision, appraisement clause. So they will waive the underinsurance also.
So keeping our audience in limelight, I would like to make it more simple. Say reinstatement value. Is it new for old?
Yes, you can call it new for old. It's another terminology which is used popular.
Say I will take examples of two things. One is machinery and one is building. They are the two important components in a corporate insurance.
Yeah.
Say I will take the example of this mobile phone, which this one I had purchased 2 years back for 60,000 rupees.
Yeah.
So today this phone is not available in the market. I mean the advanced version is there. So which is costing say 70,000 rupees.
Yeah.
But, if I am going to sell this off in the current market value, it will fetch me say 40,000.
Yeah.
But then what should be the reinstatement value in this case? 60,000 or 40,000 or 70,000?
So whatever is the value as on date for a new, the similar item is available for a lower price, then that only can be the value, because the insurer will not allow you to have a benefit from insurance. The principle of indemnity has to be followed. So if a better model is available at a lower price, so the indemnity will be restricted to whatever is lower.
So, but the insured, since the lost model or the damaged model due to a fire incident is not available in the market, and the insured reinstates with a improved model, and what will be the treatment of claim?
So generally, the principle of indemnity, the principle that is followed is that you have to replace it with the same model, same features, same capacity, or same specifications. So if you are getting a replacement with a better model, then you are in a better position than you were prior to the loss. So the normal practice is to deduct a certain amount from the claim for the betterment or the improvement that you are gaining out of the replacement. So there is a provision in property policies whereby involuntary betterment is covered. So in this case, अगर claim नहीं होता तो ये replacement आप नहीं करते. So in that sense, it is involuntary. So the insurance company will not deduct any amount and pay the entire claim, provided you have replaced with the follow-up model. So if one model is there, then the next model you have to choose.
And similarly, coming for the reinstatement of a building. Say, for example, there are two buildings of the same constructed area.
Yeah.
Adjacent to each other. The construction materials used in one of the buildings is of very high quality. They have invested a lot of money in the aesthetics, in lighting, in fittings. And the other building is a normal constructed building with general features. Say there is a fire and both the buildings are damaged equally.
Yeah.
The reinstatement value proposed in the insurance policy is same for both the buildings. Then how the claim will be settled?
So naturally there will be an underinsurance. If you have a better building. So building means not just the shell of the building. It also includes any permanent fixtures or fittings which are embedded into the building. That also forms part of the sum insured. For instance, you are sitting in this building, there is false ceiling, there is wooden paneling, and you have wall fittings and all that. So all those are...
Sir, I would like to interrupt here. When the building is completely damaged by fire, the aesthetics part is not visible after the fire. The surveyor will come and do the valuation for both the buildings on the same parameter. The cost of construction per square meter is this much and this much square meter is this much. The person who is invested in aesthetics will not get anything for the aesthetics because that is not visible in the photographs also. So how do we compensate the person who has lost his investment due to aesthetics?
It's not that you cannot make out completely. See, there will be some charred, burnt material. So you can do some analysis and see what it is, what was burnt and whether... so यहाँ पे wooden paneling है, तो अगर fire लग गया तो ये burn हो गया तो burnt material will be available for analysis, so you can analyze that. So if the building didn't have any wooden paneling and if it catches fire, and then there will not be any burnt wood and the salvage material. So from that you can understand. Secondly, there will be asset register. So how has the capitalization been done? So what is the material cost that has gone into it? All those things would have been capitalized in the books. And आप ये भी कर सकते हैं कि you can earlier I was talking about the valuation report, preparing a proper documentation. So you have that documented. So this is the building and this is all these fitments, internal fittings, fit outs. These are the things, and make it a part of the proposal itself. Say that you can give it to the insurance company. So this is the basis on which I have done the valuation. So that forms part of the record. So after the fire, question cannot be asked as to whether this was there or not. Prove that you had insured. So these can all be avoided if you have a document which was prepared prior to the loss, which cannot be challenged. Right.
So what I mean to say that what you are from whatever I could make out from what you were told for my audience, that if you want to insure your whether building or machinery, it must be properly valued so that at the time of claim, the reinstatement cost is can be claimed from the insurance company.
Yeah.
And whatever investment you have made in the improvement, aesthetics, fittings, lighting, etc., must be built into the policy with proper valuation. Even if you are not able to do proper valuation, you must keep a record of whatever you are spending on these aspects.
Yes.
So that at the time of claim, you can always make a presentation that this much I have invested and I should get under my claim. That is what what is the gist of what you said.
Yes.
And before you conclude, I have one more last question. Is there any agreed value in case of in stock insurance?
See, stock insurance generally is on market value basis. For raw material, usually it is based on the historical purchase cost, the cost at which you have acquired. And for finished goods, it will be the raw material plus conversion cost. And for the stock in process, it will be the raw material plus the extent of conversion that has happened for that material. So all those things will be there defined in the policy, and on that basis, the stock register the insured will have, which will give the stock statement as on the date of loss, and that forms a basis for settlement of stock claims.
Regarding this, I have one more question coming from this your answer. Say, there is a unit who is manufacturing some chemical, and the cost of one unit of that chemical is say 100 rupees. But due to international market fluctuations, the cost has gone up. I mean, to 150 rupees in a span of 2-3 months. And while the cost is 100 rupees, but the market value has gone up to 150 rupees. I mean, the cost of manufacturing. So at the time of claim, how much he should get? Whether 100 rupees or 150?
He has insured it for 100 rupees or he has insured it for 150 rupees?
He has insured it for 100 rupees. The cost has gone up. So how the claim will be treated? Whether it will be 100 rupees or 150?
Yeah.
If 150, then underinsurance will be applied?
No, not like that. Because if it is if the policy is on the basis of historical value of the stock value on which the date on which he has acquired the stock, then that will be considered as adequate. But you can't keep increasing the value of the stock as the stock value fluctuates on raw materials. So sometimes if the stock value may fall below also, it might become 70 rupees.
That can be any scenario.
Yeah. So your loss is whatever you have spent to acquire that asset.
Okay.
And that is what you will lose in the event of a loss. And if the value has increased, then you will have to pay for that additional cost. So if the value has increased, then you should increase your sum insured.
Yes. So for our audience, what Mr. Hari is to say that in case of a claim in stock, only the input cost is what is payable in case of a claim. Right.
Yes.
So thank you, Mr. Hari, for giving your time, and I hope the audience has gained from the conversation that we had today, and looking forward to more such sessions with you in theater. Thank you so much.
Thank you.